Hello and welcome to this guide to using different orders to trade. We're going to run through from the very basics of using market orders to using stops and limits, and we'll also look at a more complicated type of order called an OCO order. So make sure you watch to the end of the video so that you get to hear about all these different types. Hello, I'm Peter Martin with Trading 212. We add educational videos about trading to YouTube regularly. If you haven't already, make sure you subscribe to our YouTube channel so that you get to know whenever we've added fresh content. Well, let's jump into the detail, and a good place to start is with the most basic type of order, which is a market order. And this is pretty easy to understand. A market order is just an instruction to deal at the current price. With the current price, we have a bid and an offer, and you sell at the bid and you buy at the offer. So when you give an instruction to deal at market, you are just instructing that you want to sell at that bid or buy at that offer. But there may be times when you don't want to deal at the current price, and instead you want to deal at a specific level away from the market. And the two basic types of order here are stops and limits. And you're giving a specific price condition at which you want to deal. Now, a stop is an instruction to deal at a worse level, a less favorable level than the current market price. So that would be selling lower than the current market price or buying higher than the current market price. And a limit order is a little bit like the opposite. A limit is an instruction to deal at a better price for you, a more favorable level than the current market price. So a limit is an instruction to sell at a higher price than the current market price, or to buy lower, to buy cheaper than the current market price. And the easiest types of these to understand are what we called associated orders, stops and limits that are associated with an open position, instructions to close that position when your specified price level is met. So if you had a stop that was associated with an open position, we would call that a stop loss, and is instruction to deal when the market moved to a less favorable level. So let's say that you had a long position in a certain market and you added a stop loss to that position. If the market moved against you, if it dropped down, you'd be selling at a lower level to close out your position. A limit order to close would be what we call a take profit order. So if you had your long position, your limit order, your take profit would be to sell out at a higher price than the current market price. Or if you were short the market, then your take profit would be to buy back at a cheaper price. So let's look at some examples of these. Here we are within Trading 212's web app, and we are looking at a chart of the UK 100 index. At the bottom of the screen, we have a number of icons. The up and down arrows are for open positions, and we can see a 1 there within a blue circle. That means I have one open position. To take a look at that, I just have to click on open positions. And so we can see now that I have a position open in the UK 100 index. I'm long the market, I bought it, and I've already set up an associated stop. This is my stop loss at 73.15.1. If the market drops down to 73.15.1, I will sell out to close my position. The associated part means literally what the name suggests. The stop order is linked to the position. If my position gets closed, if I close it, for example, the stop will no longer be pending because it is associated with that long position. So let's now add an associated limit order. So I'm going to double click here. We get this dialog window. We can see my stop loss order there, and I can amend that level if I want, or I could cancel it by clicking on this cross. I don't want to do that. I'm going to instead type in my take profit level. So this is my limit order. It's at a more favorable level. So I'm going to put in 7,500, and the app tells me that that is 134.9 points above where I opened. I opened at 73.65.1, and that would mean a profit to me of £674.50. So I'm going to click confirm. If the market now rises up to that 7,500, my position is going to get closed out. If I want to cancel that order, once again, we can just open that window again, click on this red cross, click there and confirm, and my cancellation of my limit order, my take profit level, has been confirmed. Now, as well as leaving stop and limits that are associated with an open position, We can also leave stop and limit orders that are instructions to open new positions, so they're not associated with an open position. So let's look at some examples of leaving stop or limit orders as entry orders, instructions to open new positions. So let's now say that I want to open a position in something else, let's say a stock like Tesla, but I only want to open the trade if a certain price level is met. So first of all, let's move on to look at a chart of Tesla. So we can see it's trading around about $221 per share. And we can still see my open position in the UK 100 at the bottom of the screen here. Now we've also got this icon with the clock face, and that is for pending orders. So let's click on that, and we can see that I have no pending orders. So I could just click on this new pending order, and then we'd have to search by instrument. So we could type in Tesla here, or just clicking on the Tesla chart, right click and select open detailed trade box and select pending. And we can see limit or stop is highlighted. That's what I'm interested in. I'm interested in working a pending limit or stop. We can choose to sell or buy. I'm thinking I want to buy this stock, but only if it drops to a certain more favorable level. So first of all, let's choose my size. I'm just going to buy 50 shares. It's currently trading at $221.77. Let's say that I only want to buy if it goes down to 200. So this is a more favorable level. This is a limit order. If I was selling at 200, selling at a worse price, that would be a stop order. But because it's at a more favorable level, this makes it a pending limit order. So I click confirm, and we can see the details of my pending order at the bottom of the screen. So Tesla, we're buying it. The app knows it's a limit order because I'm buying at 200, which is lower than the current price. And I'm buying 50 shares, and this is the time and date that the order was created. Now, if we wanted to amend this level, we can just once again double click and change the level here. Or if we want to cancel the order, we can just click on this cross. So I'm going to click on this and cancel this, and it asks if I'm sure I want to do that. Okay, and then I get the confirmation that my pending order has been cancelled. Now, Trading 212's web app gives you more advanced functionality than just leaving basic stop and limit orders. It allows you to combine orders in the form of an OCO order. An OCO order means one cancels the other. So let's look at an example of this to see how an OCO order works. So let's once again look at working an order with Tesla. This time I'm going to place a slightly more complicated one. So let's first right click and select open detailed trade box, and then pending. Again, got limit and stop highlighted, but we don't want that. What we want is this one, OCO, one cancels the other. So we're going to be working two orders, but only one of which can be executed. When either one of these is executed, the other one is cancelled, just as the name suggests. One cancels the other. So once again, we select the size that we want for the order, and I'm going to put in 50 shares. So that will be for both of these two orders. They're for the same size. And then we specify whether we want to buy or sell. So let's make it like last time that I'm looking to buy at 200, buying 50 shares at 200. So if it drops down to a more favorable level, so once again, this is a limit order I'm working, and we can choose to work a limit or a stop as the other one. Well, I'm going to work both as limits. So I'm going to say if it gets up as high as 275, I'm going to sell. So this would be opening a short position if the market goes to 275, at which point it would cancel this limit at 200. Or if the market drops to 200, then I would buy my 50 shares and it would cancel this other limit up at 275. So let's click confirm, and here at the bottom of the screen in my open positions, we can see this one cancels the other order. We've got the one red cross that shows if we cancel it, that cancels these two things that we can see here. So we've got Tesla buying on limit 50 shares at a level of 200, also selling another limit at 275 if it goes up there. If either one are met, either of those price conditions, then the other one will be cancelled. Whichever one gets met first would be the one that's executed. So I'm just going to click cross here and cancel this. I click OK, and it gets rid of the two things we can see there. And there are other combinations that we could use for the one cancels the other order. So let's have a look at just a few more. So open detailed trade box, pending, OCO. So last time we were working two limits. We could work two stops, so we could, let's use similar kind of numbers. Let's say we were going to sell 50 shares at 200 and buy at 275. So let's confirm that. I've selected sell on the left side here at 200, buying at 275. So these should be two stop orders. Let's click confirm. We can see in the open positions there that we're going to sell at 200 and buy at 275. So those are two OCO stops. And we could, let's just double click and amend these. We could sell on stop and also sell on limit. Let's click confirm there. And we can see there, so this time we're selling on stop at 200, selling on limit at 275, and one cancels the other. Let's cancel both of those though. So those were a few examples using Trading 212's web app. But don't forget, you can download for free native mobile apps for both iOS and Android, and you'll find links to those in the video description. I hope you enjoyed this guide to using orders to trade. If you did, please take a moment to hit the thumbs up button and give us a like. Why not let us know what you think on the subject? Do you use orders to trade? Send us a message in the comments section. We do read each one. But that's all for now from me, Peter Martin, and Trading 212. Thanks for watching. I'll see you next time. Goodbye.